Hello everyone and welcome to my morning report analysis videos on Thursday 27th of September with me, Richard Perry, market analyst at Hantec Markets. We've had a response to several factors over the past sort of 24 hours or so. We had the Fed meeting last night. Interesting that the market didn't react really initially to the Fed. The Fed hiked interest rates, which was widely expected, but it also increased its growth expectations, but in addition to that, it removed the line in the Fed statement about being accommodative on monetary policy, which sort of led to suggestions that that was sort of the Fed preparing for sort of the end of its tightening cycle. So arguably a little bit of a dovish move. But what we did see was an initial sort of hovering around on yields, but yields are now lower. Look at that that 10-year yield now back quite sharply lower. That was 307 around the time of the announcement of the Fed last night, 307, 308, and the 2-year is back about 2 basis points as well. So what we have actually seen is a yield curve flattening, and we can see that in the 2s10 spread, which has dropped back again, as has the 5s 30s. What we also saw was the dollar gaining some strength overnight as well, and that strength, not really sure that that's come through from the Fed. I think it's more of a safe haven move, because we've seen again Donald Trump being fairly belligerent at the UN Security Council, but also we've seen risk appetite taking a hit from Italian politics as well, with the Italian debt story and the budget sort of to's and fro's and whether they're going to announce it or not today. The fears of that. You've had Italian yields which have spiked higher today, which again pulling out the yield spread with the German Bund, again putting pressure on the euro. So I think that's sort of all factored into a little bit of a risk-off appetite that we've seen today in markets. And you can see that through equity markets as well, with the DAX and the CAC both quite lower. FTSE 100 is interestingly actually now trading higher. Maybe that is a function of the fact that the sterling is an underperformer today. But generally speaking, we've got the yen, which is the big outperformer, alongside the dollar, which is basically stronger across the Forex majors today. Gold basically flat, nothing really doing there. Interesting that the silver price continues to sort of make relative gains against gold as the gold-silver ratio unwinds. And yes, sort of we've got equity markets, as I said, trading a touch lower. Interesting to see if that is a signal for a correction coming due. Now, what have we got to look forward to today? Well, we've got the German inflation out all this morning. Gets released on a state level in dribs and drabs, and then you get the statewide level of inflation at 1 o'clock. Which is expected to stay at 2%, but also then we're looking out for the US final GDP number, expected to be reiterated at 4.2%, which was where it was at the prelim reading. Sorry, at the prelim reading. That's the second. So this is the third and final reading, and then we're looking out for the pending home sales. Oh, sorry. Durable goods. I've gone past durable goods. Durable goods. Here we go. Ex-transport expected to grow on the month at 0.5%. And then we're looking out for pending home sales at 3 o'clock, which is expected to come back by 0.4%. So negative on the month by 0.4%. So, a bit US-centric today in terms of the data. But my chart today is the French index, the French CAC 40, which has, look at this move in the past sort of 3-4 months. It's been very much in this wide trading range as we get these waves of buying and then waves of selling, and it's again had a rally back towards the top of the range. Now, that 23.6% fib level took account of the rally we saw in August, and the risk would be it happens again. However, so yesterday's strong bull candle is interesting, because that came as the DAX has been correcting back. However, you look at the fact that the French CAC has actually reacted fairly positively to the initial selling pressure today, and the market, having consolidated and broken higher, is holding on to that sort of consolidation support. 5463 is the key support there for the consolidation. If that continues higher, you've got this little recovery uptrend going on, which continues to pull higher, so that is also supportive. And you've got the momentum indicators. Look at this, the RSI yesterday up at 65, that was a 4-month high. The MACD lines continue to rise. Stochastics in strong configuration. Is this still got the momentum to really continue to test these resistance levels through the last few months of this range? 5507, 5508 was the resistance that we saw from August. We actually saw that slightly beaten yesterday. So that then opens the next resistance at 5539 and then 5560. So some key levels up ahead, and it'll be very interesting to see if the bulls can hold on to this momentum of this recovery, or they start to lose steam. Certainly they've lost steam on the DAX, but the CAC is holding up much more relatively in terms of the strength of the recovery. So with that in mind, obviously good luck in your trading today, and I will speak to you later.